Hi traders, welcome to my weekly Forex video. Today's focus is on the pound USD, dollar yen, euro dollar, and AUD USD. First of all though, be aware that this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more info on that. Also, please be aware that trading foreign exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So as promised, first a review of the pound USD. We're looking at the 4-hour chart, and boy is the cable falling quickly. Last week we talked about the fact that a three-wave correction could occur, or a triangle, before the downtrend continues. As part of a correction, we had a strong, of course, momentum here, but I was expecting a three-wave correction on the pound USD based on wave analysis. That did indeed occur. Price turned at resistance and is falling quickly. Now we're looking at basically a couple of tools here. I want to introduce the pivot point and also the Keltner, and those are basically tools of the MetaTrader 4 Supreme Edition from Admiral Markets. You can test them for basically for free for a month, and if you have a live account, forever. Very useful tools, and these are just a few of them, like the mini terminal as well. Makes trading a lot easier. So you want to check those out definitely after the video. When looking at these tools, we can see that price is basically right at the Keltner and has pushed through it. So this, from my perspective, is not only a bearish turn and a test of this basically bottom right here indicated by this green line, but also a break with this current 4-hour candle pushing through the Keltner and the green line. I think that's a breakout, a bearish breakout. I would expect follow through. So looking at the hourly chart, you see the momentum in full scope right now. So what I'm looking for here is a correction. This is a momentum that has lasted long and many pips. To be precise, it has lasted about 260 pips. So from that perspective, I think a bit of a retracement, a bear flag would be great. A hook back to the S1 or the broken bottom. Probably the S1, I would say 122, 122.25, 122.50 even up to here, for instance. Could be all turning spots for the downtrend. More importantly than the level itself is how price makes that retracement. What I really want to see is a bear flag or a triangle, some kind of chart pattern correction that is mild and basically weak, and then a break of that pattern for a continuation lower. That's what I want to see before I'm trading it. And if that happens, I'm very interested in looking for the follow through to the downside, which I think has a high chance of occurring. If price, however, makes a strong upside, if I see strong momentum candles like that occurring, then I'm cautious with the downside. In that case, this is invalidating the bearish structure that I'm expecting, and I will reevaluate it, and I'm basically starting from scratch, and I'm not even going to talk about this right now because I don't think it will happen, but if it does, I'm neutral, and I'll talk about what I will do in this situation on Wednesday with my webinar on strategy. Now, I just added Fibonacci sequence levels, and that the starting point is indicated by the magenta level right here at the top. That's the starting spot at the top, and it counts the number of pips. And for me, the level 3 is very critical. Once it breaks above or below that third level, this is the first, this is the second, those purple lines, we are in a trending situation. So you see the fall right here between 3 and the 4th level. The green level is also the same as that 4th purple level. So if I see basically, as I said, that chart pattern, I think there's a good chance of price accelerating down to that 5th level, which is the S3 of today's pivot point and the 120.50. All right, so that's basically what I'm looking for, the move down to that 120.50 target. On a 4-hour chart, that would look like this. Max up to the 3rd level. I don't think it will go that far, but then down to the 4th level. That's what I'm looking for with regard to Fibonacci sequence levels on this pound USD. Now, regarding those webinars, we have, of course, a full schedule yet again in January. I really hope to see you, for instance, with Nenet's weekly FX recap. Today, Wednesday, FX strategy, looking at fibs and waves. Also looking at education, counter trend trading, and know what the market wants on Wednesday, Thursday. Regarding education webinars, we also have look at Trump's policies in the first 100 days and trading systems based on indicators. So hope to see you in one or all of these webinars. All right, the euro dollar weekly chart, definitely trying to break these bottoms. Price has already pushed below them, by the way, but The weekly candles here are showing a huge struggle with the euro dollar to break that bottom. So you can see lots of wicks on both sides, and it seems that there's not really a clear winner so far. Yes, the last three candles have been bullish, so from that perspective, a retest of the R2 and this top here and these bottoms could still happen, and I think that that could be a good turning spot at 107.50, 108. If price gets up there, I'll be looking for swing trades, looking for position trades to the downside within that downtrend continuation. I think that in that case, there could be a break, pullback, continuation. So if that happens, that's great. But will it happen? I'm not sure. Looking at the daily chart, you see the price is really taking its time going sideways, as indicated by those weekly candles already. Friday was a bearish candle, but not as bearish as the pound USD. All right, so difficult to say. I think a break below the pivot point would be an interesting development for downside, and a test of the S1 and bottom could occur. But really, for downtrend to continue, price has to break below the S1 and the bottom. That's where we have the bigger space down to 102.50, and then perhaps parity 100. Before that happens, it could still expand the correction, go sideways. Looking at this, it's pretty choppy, this price action. So it might be best just to wait for a break of this trend line or a break of this trend line here like this. Wait for some clarification and basically wait for some decision from the market itself before we as traders commit to one of the two sides, because at this moment I don't think the market knows what it wants. So rather maybe wait for more information, basically. A break of this trend line, a break of that trend line, and then we might have a bit more info about the direction. Long term is down, but will there be a bigger retracement under your dollar first or a immediate continuation? I think depends on the breakout direction. Dollar yen, kind of same story here. I think that the R1 is a strong resistance spot here at 107, 117.50, 118. Got tops in here, pretty strong momentum to the downside. So what I'm looking at is the potential for an ABC correction down to S2. Now that might not turn out to be something that necessarily has to happen. What could happen is that this was actually the end of the correction, right? This was all correction, and this is actually the start of the uptrend. So both scenarios is basically just as likely, I think. Maybe slight tad advantage, I think, for a bearish correction, but both are basically quite realistic. And I think that for me, the invalidation and confirmation levels are the most important. So what I'm looking at is the top right here. A break of that top means uptrend continuation. That green level doesn't make sense. It's resistance, so let's make that orange-red. A break above orange-red, there's that chance for price to get up to 120. I think there's then a good chance of uptrend continuation. At this spot, I think we are at resistance and a good chance of a turnaround. So if price hits the R1 and shows a bearish candle on the 4-hour chart, I think that even if this is an uptrend, a bit of a dip down to the pivot point before it bounces up to test that top could easily occur. If it breaks below the pivot point here too, there could be a bigger zigzag going on. And we'll take it step by step, but break below the pivot point, space down to the S1, break below the S1, challenge of the bottom and the S2 could occur, and we might see that zigzag. If that occurs, one way of looking at it would be to put a fib from here to here. All right, you see the 78.6 fib with the R1 heavy resistance spot and the Keltner. So I'm looking for a turnaround there with various targets at the pivot point, and at the S2 and minus 272 target could also be one if it, of course, breaks those bottoms and breaks those support levels down at 114. So various targets in mind. More cautious target would be 116.40. More aggressive would be 115.50, and most aggressive would be 114/113. Looking at the fibs right here. If that does not happen and price goes down and bounces at the pivot point, I'll be looking at, of course, candlesticks and price action to see how price responds to those key levels to dissect what is more likely, the move up like this or the move down like this. That also depends not only at the reaction of price at the R1 and 78.6 fib, but also the reaction of price at the pivot point right here, and the reaction of price at the previous top and the previous bottom. So those are basically the main zones that I'm looking at, and I'll be keeping an eye on those levels. But for the moment, a bearish turn at the R1 seems the most immediate and most realistic thing that might occur in the next day or two. And of course, if price stops here, makes a bull flag or triangle, then in that case, I am not so interested in the shorts. I will probably use trade management to cut that trade short, because in that case, this is a corrective pattern after a strong momentum up, and then a break could occur to the upside to retest this top. All right, AUD/USD is basically making lower lows and lower highs, but for the moment showing some retracement at this point. I think a continuation from the pivot point up to the R2 could be likely. So here, main point, again, pivot point, a break below that, a test of S1, a break below S1, a test of S2, and a break above R1, a test of R2. Most interesting, from my perspective, is a turn at R2 for downside, and a break of the pivot point for downside. That is, in my opinion, the most interesting. I'm probably going to wait for price to do either of the two. There could be some intraday longs. There is some momentum here that might continue today, tomorrow. That might be a bit interesting for intraday traders. That perspective, the upside, you see momentum right here. So a break there could see some follow through. I'm not jumping for joy for that possibility to trade that though, but that's just my sentiment at the moment. Thanks, folks, for joining this video. Hope that we see you in the webinars. Of course, make sure to check out admiralmarkets.com for a lot of webinars, analysis, content on a daily basis. Of course, you can check out Admiral Markets MetaTrader 4 Supreme Edition as well by going to the website and WebTrader. So a lot of things to check out, plus all these channels as well. Wish you all great trading and talk to you soon. Cheers.